Hello and welcome. You tune into Market Cafe with me, Ankita Saxena, and with me is Shishti Sharma. In the next 1 hour, we'll take you through how the global markets have fared, and also we'll take you through all the cues that you need to watch out for in today's before the start of today's trading session. But first up, let's take stock of how the U.S. markets finished yesterday. Now, we do see U.S. futures that are slumping on trade tensions. We have the geopolitical pressure that is still on, and on the back of that, we do see the futures that are reeling under pressure. We also see, the EU tensions on the back of the Trump's Greenland rhetoric that is weighing on the global risk sentiment, and that is something that has been weighing in on the markets. And on the back of that, we did see Dow Jones that ended up, 0.1% lower. S&P 500 was very, very flat. That ended with cuts of a very marginal 4 odd points, and Nasdaq Composite also very, very flat for the day, closed the day yesterday with cuts of just 14 points. But, there is a chance that, Dow Jones might fall 300 points because that's what the futures are indicating. They're already down 378 odd points, and S&P 500 is now down 0.9%, and Nasdaq futures are poised to lose almost 1% in the session. And this is on the back of course, Trump announcing on the Truth Social that, he will be imposing the tariffs on the NATO countries if they do not support him in his Greenland rhetoric. So that's how largely the sentiment as far as the global markets are concerned, Shrishti.
Absolutely, and Ankita, even Trump is definitely not backing off. He's continued to say that he will impose 100% tariff. Their follow-through plan to hit the European nations with tariff against the Greenland. Even we have the commentary coming in from Besant as well. And well, of course, the US markets were shut yesterday, but for today, we are seeing the futures definitely slumping in. But along with that, it's the commodity market that is reacting very well to the safe haven demand, while again coming back. As of now, gold is inching high with almost 1.5% of the gain, while silver also continues its uptick. But oil prices, they are seen to be a bit steady right now after 2 days of gain, and Brent oil is trading up around that $64 per barrel mark. But Ankita, believe that whole host of other global stories to track as well.
Absolutely. US President Donald Trump has linked his aggressive push on Greenland to missing out on the global peace prize, saying that he no longer feels bound to think purely of peace. He refused to rule out force, warning Europe of fresh tariffs if talks fail. The row has rattled markets, strained NATO, and pushed the European Union to weigh retaliation on up to $108 billion of US imports. Now, the Trump is due in Davos this week. Let's take a look. We can see on our screens this Trump talking about at Davos. So he is at Davos. And let's go across and listen in to what the excerpts said on the issue. Experts said on the issue.
You also take account of the NATO factor. I mean, really, we're seeing two wedges in the Atlantic. One is between the United States and Europe, especially the EU, on economic issues. The other is a wedge actually within NATO, because NATO has two members on the other side, in other words, United States and Canada. And here we are, I mean, this has been with us for some time. We're feeling some threat to the unity of NATO. So Europe's in a bit of a mess all round, both defence-wise. NATO has kept the peace in Europe for at least 80 years. That's how we see it. But also economically, with every single one of those 8 nations that are threatened with sanctions with tariffs rather, not sanctions, tariffs, voicing their views very substantially after the announcement about tariffs.
Strategic interest of the US is definitely understood in terms of the access to Greenland and why he has been pushing for it. But the resistance from the NATO countries and then his, I would say, response for imposing 25% more tariffs from February 1st means that there could be a possible escalation of tempers before this actually, I would say, takes a settlement. Having said that, the interest of the president and the United States on Greenland is nothing new. It's something that they have been talking about for quite a while. But the fact remains that Denmark has had multiple, I would say, incursions on it, and they have tried. Other states have also tried it, including during World War II, to lay claim, and it has not happened. That Denmark has been able to lose any status that it holds on it. But now the thing is serious because it is taking an economic turn.
All right, moving on to another story, and the European Union is scrambling to avert threatened tariffs by Donald Trump linked to Greenland while preparing retaliation if talks fail. Now, EU leaders will meet at an emergency summit on Thursday, weighing a €93 billion tariff package and even the bloc's unused anti-coercion instrument. Now, the dispute is set to spill into the World Economic Forum in Davos, where Trump will address the global leaders. Sumita Karir joins in with more details.
That's right. Tensions between the European Union and the United States are only soaring, given the fact that US President's latest tariff threat on 8 European Union countries over Greenland. This could result in a mega trade war, as the EU nations, they are preparing for countermeasures reportedly. And this could lead to all the countries actually suffering a massive blow. In fact, retaliating to what Donald Trump has been suggesting with respect to Greenland and Denmark, President of France, Emmanuel Macron, stated that no amount of intimidation will change EU nations' course on Greenland. Remember, the US president announced 10% tariffs on 8 European countries from February 1 and a 25% further tariff from June 1 in case there is no resolution to this measure. In fact, reports suggest that EU is also thinking of some countermeasures. One, it could be possible retaliation related to a package of its own tariff of 93 billion euros of US imports. In fact, those were previously suspended for 6 months in August. In fact, French President Emmanuel Macron has also asked the EU to activate its trade weapon that's called the Anti-Coercion Instrument, ACI, and it's more popularly known as the trade bazooka. And this so-called trade bazooka could have broader impacts on the US, and that includes limiting access to public lenders, investments or banking activity, or restricting trade in services in which the United States has a surplus with the bloc. In fact, following this, the US president issued a statement suggesting that NATO has been telling Denmark for 20 years that you have to get the Russian threat away from Greenland. Unfortunately, Denmark has not been able to do anything about it. Now it is time, and it will be done. In fact, it remains to be seen how the engagements of President Donald Trump are going to go with some of the European leaders who are going to be in Davos this week. President Donald Trump will also be in Davos, and of course, it'll be interesting to see the kind of a direction that this particular conversation really takes, because this is not going to be beneficial for both either the United States, neither the United States nor the EU, and that is what the joint statement essentially stated, that tariffs would undermine transatlantic relations and risk a dangerous downward spiral.
And while Trump is set to meet global CEOs in Davos this week, meeting U.S. policy firmly in the spotlight and in the World Economic Forum. Now, business leaders across finance, crypto and consulting have been invited to a White House-backed reception after Trump's special address on Wednesday. Treasury Secretary Scott Bessent has warned Europe against retaliation, while China's Vice Premier He Lifeng is also due to address the CEOs.
And Federal Reserve Chair Jerome Powell will personally attend Supreme Court arguments this week in a case testing Trump's power to fire Fed Governor Lisa Cook. Now, Trump moved to sack Cook last year, alleging mortgage fraud claims she denies and for which no charges have been filed. Now, the case is seen inside the Fed as existential, with major implications for central bank independence, as Powell himself faces a separate criminal probe linked to headquarters renovation.
And India and UAE will conclude a framework agreement on defense and on joint space missions, announced Indian Foreign Secretary Vikram Misri. Now, the letter of intent has been signed yesterday during the visit to UAE. President to Delhi said that the Indian Foreign Secretary. Listen into what he had to say.
First of all, a letter of intent was signed between the two sides to work towards concluding a framework agreement for a strategic defense partnership between India and the UAE. A letter of intent was also signed between the Indian National Space Promotion and Authorization Center in Space and the UAE Space Agency for a joint initiative for space infrastructure development and its commercialization. Under this particular initiative, we will look to setting up new launch complexes, satellite fabrication facilities, joint missions, space academy, and training centers.
And the International Monetary Fund has turned more optimistic on the global economy because in their latest update, the IMF has raised 2026 world GDP growth forecast to 3.3%, signaling resilience despite recent tariff shocks. Now, India's growth outlook has been revised sharply higher for FY26 to 7.3% on strong earnings momentum. Anjali Palod breaks down what does it mean for India and the global economy.
Right, so the headline number is out. The IMF has raised its 2026 global GDP growth forecast to 3.3%, and that is up 20 basis points from the last forecast in October. The primary driver, according to IMF, is the massive surge in AI investment, which the fund says is offsetting the headwinds that have come in by the global trade disruptions. Now, turning to the world's two largest economies, both US and China have seen their 2026 outlooks upgraded by 30 basis points. The US is now projected to grow at 2.4%, and this is fueled by the lower policy rates and the new tax breaks, while China's 2026 growth is being pegged at 4.5%. Now, for us here in India, the news is a little bit of a double-edged sword. The IMF has raised our FY26 growth forecast following the powerhouse momentum we saw in the October to December quarter. However, looking further into FY27, the fund expects this growth to ease as these temporary cyclical factors begin to fade away. Elsewhere, the Eurozone sees a marginal bump at 1.3%, while Japan is nudged up to 0.7%. Brazil, however, has been downgraded to 1.6%, and this is following last year's monetary tightening there. The IMF has, however, warned that the risk remains tilted to the downside for the entire global economy. They're specifically watching out on the AI-driven market correction, renewed trade tensions, and the fiscal vulnerabilities in the high-debt nations. But all in all, the tech boom is providing the fuel for now, but the fund suggests the medium-term path remains complex.
Right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more updates on the market. Stay tuned. Welcome back. You tune into Market Cafe, where we are getting you all the cues that you need to watch out for before the start of G Street. And so let's take a look at how the Asian markets have opened up at this juncture. Well, negative global handover and the negative impact on the Asian markets, of course, since those Trump commentary has come out. We do see Shanghai, that is absolutely, Shanghai though is very, very flat. It is trading in the green with just an uptick of 8 odd points. ASX S&P 200 is trading with cuts of more than 0.5% as of now. Kospi is down 0.7%, and Nikkei is down 0.8%. Now remember, as far as the Japanese market is concerned, the 40-year bond yield has hit fresh highs. Now remember, the bond market is inversely proportional to how the markets are moving. So 40-year-old bond yield hitting a high means that we do see the downtick coming in the market. So Nikkei is trading down with cuts of almost 1% in the trading session. So that's how the market is shaping up. We also have GIFT Nifty. If you can pull up the charts for GIFT Nifty and how that is faring right at this juncture. We do have, the implied start of GIFT Nifty right now is showing a very muted start right now. 28 points uptick is what we see. So very, very muted, flat start is what it's indicating for Indian markets as well.
All right, so that's about the market check when it comes to the Asian market specifically. But back home, indeed, there are a lot of stocks that you should be watching out for. And firstly, let me take it across to Meryl, who's standing by with just that. Good morning, Meryl. Take it away.
Well, yes, here are some of the stocks on our radar today, starting up first with LTI Mindtree. Now, this company's the net profit here has taken quite a hit on about 30% on the back of one-time labor code charges. And it's also planned wage hikes in the Q4, expecting almost 50% of its staff to get raises. Havells India as well has had a mixed third quarter results with net profit way below estimates despite a slight rise. Revenues, however, have beat estimates by a very small margin. Tata Capital has seen quite strong growth. They've seen strong AUM growth across retail, SME and housing finance segments, which supported their overall performance. Consolidated profits for them stood at 20% higher on a year-on-year basis. Oberoi Realty saw quite a mixed performance in line with expectations. Net profit was mainly flat here. Consolidated revenues and PAT were slightly up. CAT as well has posted quite good performance with net profit up over 60%. They were quite a strong quarter for the company. They've also announced an additional investment of around 1,314 crores in the Chennai plant for capacity additions. These are some of the stocks on our radar today. Back to you.
Thank you so much, Meryl, for getting us that list. But with this, let's also tell you which are some of the other counters that you should be watching out for. And first up is restaurant brand Asia. The company will be, or the stock will be in focus today, wherein some of the reports are suggesting that PE firm Everstone is likely to sell its entire 11.3% stake in restaurant brand Asia, that is erstwhile Burger King India, while its investment vehicle QSR Asia Limited. So let's watch out for this particular counter. UPL will be in focus as well on the back of a value unlocking announcements, because as we know that their arm is Advanta, and that has surprisingly filed a DRHP for an IPO with SEBI, where it will be complete offer for sale, and even UPL will be the majority promoter who's going to be selling its stake in this OFS when it comes to Advanta IPO. GMDC will be in focus as well on the back of a positive development, wherein Bark Tech has received the indigenous rare earth processing technology. So let's watch out for this particular counter. This is particularly for their Ambagudnagar project, and along with that, the next stock that we will be watching out for is Lemon Tree Hotels, as the company has signed a new property deal with respect to another new additions that the company is making with respect to their total keys, and that is going to be in Uttarakhand. Corona Remedies will be in focus as well on the back of getting a GMP from the European Council for their Gujarat facility that will help them access different markets. Amber Enterprise, surprisingly a very positive announcement coming in for this particular counter, as well as the company has been allotted land for multiple manufacturing facility, and that's right adjacent to the Delhi airport. Yamuna Expressway Industrial Development Authority has allotted the land, and that is going to be a big sort of a capex that the Amber Enterprise is going to do in this particular facility. Raymond Lifestyle will be in focus as well, as the company has announced a new CEO, wherein Mr. Satyaki Ghosh will be heading over on the position of Chief Executive Officer. So let's watch out for this particular counter. And lastly, Bajaj Electricals will be in focus as well, wherein the company is now seen to be expanding into the wires business under the lighting solutions segment. So these are some of the stocks that we should be watching out for.
All right, those are the stocks that will be a buzz in the trading session today on the back of those news flow. But let's move on to the countdown to the union budget that has already begun. Prashant Gadhi, who's a partner at Technology Deloitte India, shares his expectations from this year's budget. From policy support to growth drivers for the technology sector, he lays out what to watch out for. Let's listen in.
The union budget presents a timely opportunity to catalyze investments and incentives towards India's long-term strategic advantage. India has a huge advantage in building multilingual, context-aware large language models that reflects India's diversity and socio-economic realities. There can be dedicated funding for training LLMs on domestic consent-based data sets, including government, open, and academic data. High-performance computing remains the backbone of AI innovation. The upcoming budget should meaningfully expand on India's ambition to deploy a high-end GPU infrastructure at scale through public-private partnerships, ensuring affordable and equitable access for startups, academia, and MSMEs. Again, this is a global contest where we have to play. Investment in startups is another important area. By anchoring innovation at home, we can build globally competitive AI companies while addressing domestic developmental priorities. There can be incentives for global companies to co-develop AI solutions with Indian startups, fostering technology transfer and local capability building. Last but not least, skilling remains a cornerstone of India's AI strategy. The budget should prioritize AI education and workforce transformation. Leveraging AI to transform low productivity jobs into technology-enabled livelihoods will be pivotal to achieving the vision of Viksit Bharat 2047, ensuring equitable growth in a digital economy. As AI adoption accelerates, promoting safe, inclusive, and responsible AI must remain a key national priority.
All right, but with this, it's time now to slip into a very short break. We'll be right back on the other side. And let's get you some important voices from Davos. Times Network, Mihir Bhatt spoke to Saida Zaidi, Senior Managing Director at World Economic Forum, and discussed a whole host of subjects such as artificial intelligence, employment, and the need for economic cooperation amid tariff wars. Listen in.
Coverage from World Economic. Welcome to our special coverage from World Economic Forum at Davos. I have a very special guest with me. I have Managing Director of World Economic Forum, Sadia Zahidi, with me. Sadia, thank you so much for joining us at Times Network. Yeah, and it's great being here. I think the excitement is at its peak as World Economic Forum kicks off. And, as we have heard that this is the largest ever forum with 65 heads of state attending and more than 1,800 corporate representatives. So lots of exciting stuff. But I want to discuss with you a couple of key burning issues, as far as global economy is concerned. I'll start with jobs and AI. Because, one of the stark number which is floating around, which I have also seen, is that almost 22 to 24% jobs are likely to change by 2030. That's almost here. So that's, what is your reaction to that?
Yeah. So actually, it's a number that we put out over this last year through our Future of Jobs report. So that's essentially a quarter of all jobs that will go through some kind of churn. And it's a net positive, right? Mm-hmm. So we're expecting that there will be more jobs than less. But at the same time, it's a big churn as a large number of jobs get displaced and a large number of jobs get created. Mm-hmm. Now, there isn't a one-to-one match between those that will lose their jobs and those that can move into those new jobs. That's going to require a massive amount of reskilling and retraining. And again, it won't be a one-to-one match. There will be a need for moving people who will lose some of their current roles into adjacent roles, and there will be a need to massively bring talent into the new roles that will be created in this sort of broader new economy. Now, what is that new economy? It's certainly not just technology and artificial intelligence. It's also stemming from geoeconomic changes and what that is doing to jobs. It's stemming from the energy transition and the broad shift towards sustainability and green. That's also leading to a whole new set of skills. And then, of course, there's some changes that are coming because of demographics. For countries that are aging, require much more healthcare than they did before. Countries that are growing require much more education than they did before. So those are the four big factors that are leading to shifts in the future of jobs.
Right. Sadia, the fear is that probably the governments across the world are maybe not necessarily on top of the entire situation. So nobody has a full handle on the entire gamut of things which are at play. And especially when it comes to AI, to some extent, everybody is trying to guesstimate that where exactly what kind of impact will happen, which is slightly unnerving. What's your take on that?
So we've tried to suggest that the only way to navigate through this uncertainty is to use some scenario thinking. And we put out something recently to try to demonstrate that, and we're working with business leaders here this week on it. So let's take two very simple vectors. One being how quickly artificial intelligence is integrated into the economy, and the other being how quickly people get reskilled, upskilled, and retrained.
And Maharashtra is making a strong pitch from Davos 2026. Chief Minister Devendra Fadnavis shared all the MOUs that have been signed already that will enable the state to position itself as a key driver of growth. Listen into the slice of that conversation.
I think Davos is a place where you have to be present if you want to be relevant in this geopolitical economic scenario. I think at Davos we have a very big agenda because of late, because of our Honorable Prime Minister's initiative, India is a place where every single investor wants to come, be it the manufacturing sector, be it frontier technologies, be it infrastructure. And I think we are here to tell the Maharashtra story. We are here to tell them that in India, the best place to come is to come to Maharashtra. So we have identified 10-12 different sectors, and we are interacting with the investors in these 10-12 sectors. We are confident that we will be able to ink a few MOUs, which will be the intent to invest. And I think that also will be in varied sectors, like data center, like in infrastructure, in manufacturing, in smart businesses, green businesses. So I think we see a huge opportunity here, and today only we started, and I think in the entire day we have been able to actually sign the MOUs worth 3 lakh crores.
Wow, on day one itself.
On day one itself.
And which are the sectors where you have signed these MOUs?
So today, 2 major MOUs I would tell you. One, we have signed in the space of data center, which is a hyperscaler, and it will be actually hosting few very iconic companies. Along with that, one more MOU for 4,000 crores which we have signed is in circular economy. Today, you say circular economy is something which is very important, and I think that MOU is very dear to me, and will have very good investment in circular economy.
Sir, you also mentioned about green energy, and that is something which is, in fact, today I was interviewing World Economic Forum Managing Director, and even he mentioned that the biggest risk in next 10 years for global economy is environment and climate. So what are your priorities as far as green energy is concerned?
So I'll tell you that so far as Maharashtra is concerned, we have done a lot to actually towards our endeavor of green energy. So I must tell you that Maharashtra is the first state which has created a separate company to provide electricity to the farmers, and this entire power which we are generating is solar power. 16,000 megawatt of solar power is provided to the farmers, and we have entered into such contracts now that by 2030 52% of our energy mix will be green power. So we'll actually achieve the target given by Honorable Prime Minister. We are doing it, whether it is green energy, whether it is green hydrogen, whether it is PSP, pump storage. I think Maharashtra is becoming hub for pump storage. In fact, Maharashtra will not require that much of energy, but we are doing it for the entire country. Up till now, I have signed MOUs worth around 80,000 megawatts in pump storage, and we want to become the hub of pump storage electricity, so that as you know that pump storage is required to stabilize the entire grid. Once you have so much of solar electricity in your grid, you need something to stabilize, and that is what we are aspiring to make Maharashtra as a hub for PSP. So I think in terms of green energy, Maharashtra has done a lot and it is progressing very well.
Right. Sir, also semiconductor is obviously one very critical sector, and India is highly focused on that. India intends to become self-reliant in semiconductor space. What are your plans on semiconductor and attracting them to Maharashtra?
So I'll tell you, ultimately semiconductor is a process of, it is a mix of 8 different processes. And I think all those 8 processes are differently now located in Maharashtra. All those components are now being created and manufactured in Maharashtra, and we are looking towards certain investments, big time investments in semiconductor in the state of Maharashtra. We have now OSAT facility near Mumbai, which is doing very well, and I think that is helping the entire semiconductor industry. And I'm sure that will be a big player in the space of semiconductors.
And capex in AI may create a new golden age of innovation, says Global Chairman of PwC, Mohammed Kande, on the sidelines of World Economic Forum. Let's listen in as he speaks exclusively to ET Now's Aisha Faridi at Davos.
The level of uncertainty that we have today, that CEOs have to deal with, uncertainty around 2 dimensions. The first one is technology. AI is advancing really fast, and they have to make capital decisions to decide how fast and where to invest when it comes to AI. The second one is around the geopolitical turmoil that we are actually all witnessing or experiencing today. So that is why we're seeing that level of tension and pressure is actually what we believe is getting to only 30% of them saying that they can see a path to growth. But at the same time, though, more than 50% of the CEOs are saying that they believe the global economy is going to be okay. So it's about the companies themselves, not about the global economy, which is an interesting fact also. The economies are fine. It's about the role that themselves will have to play with the companies in the economies of the future. Fascinating development.
It's fascinating but puzzling as well at the same time, because the global growth is the reflection of what the CEOs and their companies do.
And at large, when you see the global growth, when you see the stock markets around the world, when you see the flow of capital around the world, there is no recession. Capital is moving, stock markets are growing up, companies are investing. Yes. So the economies globally, at the macro level, the economies are volatile, but they are growing. It's about now, what is the role and what is the play that any company will have in that new environment that is shifting very, very fast.
Indeed. And Sanjay, what a fragmented world it is in, like Mohammed just said. What role do you think AI can play in the future, not just productivity, but profitability of the future?
Yeah, I mean, as we say, technology for technology is passe. It's about how do we use technology for transformation. And I think AI is a mechanism by which the transformation will happen. The reinvention will happen. I mean, we just heard that businesses are looking to do things which are very different. Now, what will help them do it? AI will help them do it, right? So it is not just about back-end processes and getting some cost savings done, etc. I think it's about transformation of businesses, and where the value pools will shift, AI is going to cause that reinvention to happen, right? I mean, if you look at it, many businesses, where the valuation used to come 3 years back to where valuations are coming today is very different. And in 3 years' time, it will be very different. And I think AI is going to be an enabler for that to happen.
And well, from the corridors of power at Davos, ET now brings you voice that shapes the world economy. One day, one of our World Economic Forum coverage. We spoke to Abhishek Lodha, Girish Tanti and Martin Sorrell. Let's listen in.
Expecting much more of a slowing of the global growth than we have seen. This year we expect a little bit more than 3%. It's not like trend growth closer to 4% we had for decades, but with all the geopolitical turmoil, it's not bad. Trade used to be the engine of growth, and trade grew twice as much as the global growth. That, I think, is not happening in the years to come. But what we're seeing now, the trade is still growing. It's growing around 3%. So it's not stopping. So we are trading more with each other with respect this year than we did last year. So that is important to remind ourselves about. And secondly, on top of this, we have $1.5 trillion being invested in AI last year. This will continue also this year. So a year ago, I would have been worried that we could see a decade of slow growth like in the 1970s. If there's no major wars and escalations with the new technologies, we could possibly also, if you want to look at the bright side of life, and that's also something we need to do, we can see decades of high growth because of the investments in the new technologies, increased productivity and all this.
Various different ways India is moving on all four fronts. And so it's very exciting because with the world's largest population, a very significant and deep base of data consuming users, strong connectivity, and more importantly, a nation which can benefit significantly if we apply AI in the various areas which hamstring our growth right now. So I think the opportunity in India for AI is immense, and therefore it's prudent for companies which believe in India, believe in India's long-term potential to build this core infrastructure. This is like the airports or the railways. In 20 years' time, you'll say that, the data centers are as important or as critical to creating productivity and creating growth as airports are. So that's where we want to be.
Done, I think, in my view, a brilliant job. Brand Modi is strong, brand India is strong. Just had a discussion with one of your competitors about the difference between brand Trump and brand Modi, but both in their own ways unique. But I think Modi has done a great job for India, and India is in a great position. From an Asian point of view, it's the economy of choice after China, or maybe adjacent to China. China, I think, will continue to squeeze Taiwan. If you're big in China, if you want to really be bigger, if you're 15-20% of your sales are in China, like Apple or LVMH, you probably want to diversify a bit. And Indian entrepreneurs are now spreading their wings around the world. You see it here at Davos. So they're not only successful in the Indian context, but also in a global context. So this is a new age for India. And I think Modi's positioning between the superpowers is probably the right positioning. There's some criticism of that, I think, but it's probably unfounded.
And in an exclusive conversation with ET Now, Prateek Antony, CEO of IKEA India, says that the company is seeing strong online demand from families in Tamil Nadu, making Chennai its next big growth bet. Now, IKEA has entered the city online first, calling it a learning ground before a likely offline store launch once land deals close. Now, the retailer plans 30 stores pan-India by 2030, will double its workforce to 6,000, deepen e-led deliveries and push its ambition to make 50% of the products sold in India locally by the end of the decade. Here's an excerpt of that chat.
Part of learning about the market, seeing which products that work, what are the questions you get and so on. And that will then hopefully, most likely follow with a store expansion. As real estate deals are real estate deals in India, we don't promise anything until the deal is signed. But of course, we have our intention in opening offline points also in Chennai.
Right, I understand you can't say much, but I also know that the Tamil Nadu government is keen on partnering with you to help find a location that suits your needs, as well as a spot that works for your customers for a potential Chennai store in the near future. So are you close to identifying a potential land bank for that store?
We have been scouting Chennai for many, many years and actively worked with the authorities on various land parcels and trying and so on. So now we are in a stage where we look at first learning what's happening with our online, and then to see most likely a two-store scenario over time. But nowadays, as you know, we are an omni-channel retailer. We don't only do the large format stores, but we have the opportunity of changing the format depending on the needs. You saw in Delhi, we opened a smaller format first. We have an 8,000 square meter in Mumbai also. So we will tailor make a solution that fits the location where we want to be, because we want to be near the customers in a good way. So let's see which formats that come first to Chennai.
Right, Patrick. So where does IKEA go from here in terms of expansion pan-India? How many stores do you have in the pipeline? And how many delivery pin codes would you like to cover in the near to medium term?
So we have, again, a quite exciting expansion plan. We're looking at opening around 30 stores by 2030, so it's another 25. The main focus is on the 6 big markets for us. So it's Delhi, it's Bangalore, it's Mumbai, Chennai, it's Pune and Hyderabad, where we'll make most of our attention to. Then, of course, there are other tier 2 cities where we are also looking at. But the main focus on these 6. E-commerce will spread to more and more PIN codes as we go, because, of course, the opportunity is big in India. So I see we will have a combined effort of both online as well as development of the online capabilities.
All right, but with this, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Market Cafe right here on ET Now. And now actor and entrepreneur Alia Bhatt has signaled her brand Edamama has a dream to venture into pet care following the brand's recent expansion into the baby personal care segment backed by Reliance Retail's majority stake acquisition. The move into the pet care is a possibility as Edamama aims to become a holistic one-stop shop for all things related to child and mother and beyond. My colleague Shibani got in touch with Alia Bhatt to know about her view on the same.
Once you have this umbrella which is expected to care and take care of your child's needs, growth, care, and then of course there's the fashion element as well. Once you create an umbrella, anything can happen underneath it. Again, I want to tease this possibility, which is Edamama's also ventured into books. So we had our first book launch last year called The Adventures of Edamama, which is a story about a little girl and her dog. And pets are a huge category as well.
Yes, and pet care is in fact...
I mean, not pets, pet care.
Pet care is
pets at the Edamama store.
really a booming space right now with a lot of big FMCG players also getting into it, which also, by the way, have great presence in baby care and personal baby care products.
So that's why I'm saying I'm going to tease it because that is huge category that we see great potential in, that we've already started to work on.
Yeah. So how do you create a niche for Edamama in this highly competitive baby wear and baby care and personal care?
Product storytelling.
Products and storytelling is what
Something
stands
that I
out.
want to work more on in this year is my storytelling, because I think the storytelling exists. It just needs to be a little bit louder and clearer for the world.
All right, with that, it's a wrap on this edition of Market Cafe. Shishti and I will take your leave. Thank you so much for tuning in. Don't go anywhere because the market will take the market action forward.